Hello and welcome to my channel. I am recording this on the 25th of October 2020 and I am here to share some of the knowledge and insights I have, or some of the research I've done, with people who, like me, are investors in the gold and silver mining sector. I am pointedly not trying to entice anybody into this sector. This is not a sector for newbies or people who have limited knowledge of it. You can lose your money very quickly if you're not careful. I am here simply to share information and knowledge with people who are already in. I've been in the sector for about 10 years, lost a lot of money at the beginning, I learnt my lessons, and I think I realise how the game is played. But at any rate, I'm not here to give investing advice. I'm simply here to share information which is all in the public domain, but which requires effort to actually compile. This first video is just an introductory video, starting from the beginning, so anybody who needs a reminder or has a couple of blind spots, we can cover those as we go. As a consumer of YouTube videos on these topics, I personally have found it very frustrating when watching many videos. The assumption is that you are watching it on super high definition broadband and you can see the axes, which are super small, but you can see them because you've got a big screen. No. Most of the time when I'm watching videos, I'm watching them on a tablet or even on a mobile phone. So with that in mind, I do intend to generally follow the principle that keep the axes in as large font as you can, use the entire screen space, and I hope that will be just the ticket for people who follow these YouTube videos as I do on a small gadget. Okay, so the mining sector is segmented in various ways, differently by different people, but in the way that I would look at it, you've got your major miners, you've got your explorers who are not mining, they're simply exploring, and when they have a find, they're hoping to sell the rights or sell the information to a big company, make their money that way. And then you've got the mid-cap miners who, they're not the majors, they are producing, they're just not of that larger size that the indexes would be interested in. Anyway, there are two indexes which kind of describe the information I have. One is the HUI and the other one is the XAU. And what are those? Well, the HUI is a basket of around 14 companies that do not hedge their production. This means that they have a high beta to the actual metals price. By contrast, the XAU is a broader index. It has a few silver miners in there. It has a few royalty companies in there. Royalty companies don't get their hands dirty with mining. They simply acquire and sell the rights to various mines to people who will actually do the work. And there are also unhedged miners in the XAU. So that's the difference between the two indexes. The HAU is focused just on unhedged gold miners, whereas the XAU also includes hedged gold miners, royalty companies, and a few silver miners. And I think there's about 25 companies in the XAU. So there are some great sites for tracking those indexes with all the technical analysis and, so on and so forth. Because I'm sticking to my principle of trying to keep to a clean and easy to read screen, I'm using the Kitco graph. And Kitco is a funny old site. It's got some great information there, but if you find some, bookmark it, because if you go back 1 month later to find what you know is there, you might find, but you can't find it. That's happened so many times to me. It's got some great information, but the structure of the site and the search engine is quite shambolic. So here with the HUI index, this is for 6 months. If you look at the URL, kitco.com/charts/popup/HUI 0182.html. 0182 is the number of days. If I typed 365 in there, well, I'll show you, it will flunk. It will flunk. There we are, it flunked. But if I overtype HUI with XAU, I will get the 365-day chart for the XAU. Here it is. So, as you recall, I'm recording this on the 25th of October 2020. I'm looking at a year's worth of data here. We can see that the index had been climbing up until the point when the entirety of the stock market had crashed due to the COVID lockdowns. It made a bounce back from there and continued to climb up, and then gold and silver really took off end of June and through July. And now it's in a period of consolidation. So it had fallen to a level of about 70. And then within 5 months, it had risen to 160, which is more than a double. And now it's consolidating. And this volatility is what attracts people to the miners. And obviously, what we can now have, we can have a continuation of the bull, or we can have some kind of collapse, depending on metals prices. And on that point, I would just like to say that although these indexes are correlated in the long term to the metals prices, on a day-by-day basis, they can move in opposite directions, and they can be whipsawing through the day, going one way and then the other. And the reason for that is that the mining shares are very, very sensitive to the direction of the metals, and in particular to anticipation of where the metals might be running. So we are to some extent talking about different investor classes. Obviously, there's the big boys who you could say are manipulating the markets, are involved in both markets. Sometimes it's claimed that the mining sector moves first and then the metals follow. But this can just as easily be a head fake that tricks you into thinking the gold and silver markets are going to move one way, and then they actually move the other. So one can't be too deterministic about when the shares and the metals themselves are moving in different directions, what that actually means. This is a tricky, difficult sector. No disguising that fact. I wouldn't claim anything else. So, having established the status of these indexes, we will now go and look at the composition of these indexes and move forward from there.